Hi everyone and welcome back to another live trading series. Today is Thursday, January 21st, and I'm going to be talking about when to take profits. A lot of people have been asking me, do I hold to expiration when I sell an option? When do I take profits? Is it 75%, 80%, 30%? So everything I'm going to tell you now will be based off of what I learned from the tastytrade folks. So I have their YouTube channel, their YouTube video up. This shows they kind of back tested Netflix, what they found, what they've been doing for the past couple of years. So this video was released around 8 years ago. If you take 50% profit, you'll be successful, let's say 90, here they have 91% of the time, and you'll make more money per day. Take a look at what happened when they held to expiration. They actually lost money. Because of the volatility of Netflix, they actually lost money. They back tested on SPY and Apple, and it makes sense to take profit early. So what I'm going to show you guys, when you sell, let's say you sell an Apple call for $100 and you sell it for 30 days. Don't consider that $100 yours until you close it out or it expires. So what I want everyone to think of, it's like, hey, I sold it for $100. I made $100. If I close it out at 50%, I'm losing $50. You're not. Don't count that money yours until you close it out. So let's say you sell something on Tesla, you make $1,000. Don't count that $1,000 yours, count it as $500 because you want to close it out. Let me show you an example. So if we go here, another thing I want to talk about. Let's say 50% is fine, but also when it doesn't make sense to hold to expiration anymore. If you make 40% of the profit within 1 day, but then there's 29 days left on your option, why are you going to hold for 29 days when only to make 60% when you can kind of lose that money? So a lot of trades I've done, let's say I'll show you what happened with FCEL. I ended up making, I think I'm up 40% and there's still 25, 26 days left. So why hold it when I can potentially lose money holding to 50% or expiration? I already made majority of the profits. 45% is not majority, but I made a lot of the profits now. Let me lock in my gains and then sell another one or refocus. If you take a look at what's happening on Palantir. So this is what I mean by selling at 50%. So I sold these for $1.04, so $104 each. I don't count that as my money. Right now it's worth $41. So I'm going to close it out and make, let's say, 60%. How you close it out is you buy back the exact options you sold. So we'll go here. I'll just do market. You'll see it says buy to close. So I sold them for a total, I think $510, and I'm buying them back for $205. So my profit is around $300. Again, try to manage these. There's only 8 days left in this, but the Palantir is kind of a meme stock. It is a little risky. I don't feel comfortable holding a little longer. Let me close this out and hopefully it'll get filled in this video. There we go, order filled. Let me show you something else. If I go FCEL, I have 29 days left, but I opened this recently. I opened this a couple days ago. So I'm already up. Let me what is my calculation? So 50% would be at $40, and right now it's at 47. But I made almost 50% within 3 or 4 days. I'm not going to hold it to expiration. I'm going to close it out now. So let's close it out. So see here, I sold these for $800 total. I'm buying them back for $470. Let's just go market, buy to close. I get some of my buying power back. So I don't count this as losing $470. Like this $800 wasn't mine to begin with. Let me close that out. I feel better once these are all closed and ready to go. If you guys want an update what's going on with my poor man's covered call, I'm up right now. I'm up like $500, I guess, maybe even more once you count this. Another thing I want to show you, NVDA. A lot of people are interested in strangles. I've been trading strangles for a while. This is my setup on NVDA. So again, this technical analysis, every strategy, it works until it doesn't. What does that mean? A couple months ago, I found this trading range. It's easy to find this trading range. The lowest point it was touching is $470. The highest point was $590. And it's been trading within this range since August 25th. So what I do is I sell like 450s to give myself some room. And then even more, I go up to like 610, 620. They have earnings February 17th. Right now, if we see what I'm doing with NVDA, I have the strangle. So I sold the call side for $255 and now they're worth $81. I sold the put side for $437 and now they're worth $20. So I'm going to close these out. I'm going to roll them further out in time. There's 8 days left. I don't want to hold to expiration. I just want to roll it out. Now notice the hypocrisy. These are more than 50% profitable. So why didn't I close them out? To be honest, guys, when I make these videos, I try to save all my trades for the videos. I don't want to do it off camera and then explain it to you after. I feel like more people learn by seeing instead of learn by hearing. So if you see what I'm doing, maybe you can understand, maybe it makes more sense. So yeah, I'm, a little bit of hypocrisy. This is like 90% profitable, but I did save these for the video. So I'm going to create order. And so I'm buying back the exact ones I sold and I'm selling new ones. So I'm going to February 19th. Now, since this is going to be after their earnings, I am a little worried about the earnings side. So I'm going to go a little further out just to give myself some breathing room. My risk is the upside. So when you sell a naked call, I don't have the shares. So what this is saying, I have to sell 200 shares to someone at $630 if it blows past this. I don't have those 200 shares, so that's the risky side for me. What I don't mind is getting assigned. So when you sell a put, someone can force me to buy 200 shares at $460. I have the money. I don't mind buying at $460. To me, that is a good price for NVIDIA. So, I give myself a little more breathing room there. Now let's see what I'll be making. So obviously you don't want to go just at the bid. See how this has $504 and $539. You want to try to make a little bit more because this is an auction pretty much. You can choose the midpoint maybe. We'll see what happens, but I do want to get filled. So when you click sell, buy to close the first two, sell to open the others. I'll be making $1,000 now up until I close it out. So I'll send this order and as you can see, it gets filled right away. Amazing. I'll show you one more on Tesla. So I've been selling Tesla strangles. I will never sell a Tesla strangle again, or maybe I'll reduce it. I've been selling 3 Tesla strangles. This is a freight train. It keeps going up. It just stresses me out. So if you see here, I sold this for $793 and $903. And right now they're worth $20 and $24. It looks like I'm extremely profitable here, right? Look, I made $5,000, but I made a loss rolling this out. If you watch one of my previous videos, I think my previous strike for the call side was like 870. And then Tesla kind of hit that and I got scared. So I rolled it up at a loss. This looks like a gain, but trust me, it's a loss in January. So I think I lost for like $600. But I am happy that these are ready to be closed and managed. Again, why are these 90% profitable? I'm saving them for the video. I don't want to do a lot of things off camera. A lot of people enjoy or just learn by seeing it actually happen. I want to walk the walk. I don't want to tell you what to do. I kind of want to show you that I'm actually doing it. So maybe I'll start closing more at 50%. But again, so what I'm doing is buying to close and I'm going to be selling puts. I don't mind selling puts on Tesla and I'll probably choose $730 as my strike. What would I be making here? So if I sell 730, I think that's fine. So I'm closing out 3 strangles and I'm selling 1 cash secured put and it'll be, I think it's like 6 days to expiration. That's about it. Let me go a little bit. Let me try to make some more here. Buy to close 3, sell to open 1. They'll be paying me $465 for this. I think I'm okay with that just for 6 days. Let's see what this looks like. Oh, sorry, 8 days. Days expiration, 8. This is fine. Let me see what else is there. Managing my winners, managing profits. Okay, let me show you one more thing. I do have 29 days left on these 10 AMD strangles. I'm probably going to wait until after earnings. So I have 5 days until earnings. I do want I do want to wait. I do want IV to be crushed a little. As you can see, I do have one side that is 50% profitable, but I'm looking at the strangle as a whole. I don't treat each leg individually. I already rolled this side down from 125 to 120 to 115. So with the strangle, how you manage it, you could kind of bring one side down or one side up, make it a little tighter, but I do want to see what happens after earnings. I don't mind holding at 77.50 per share. So I'm going to see if it tanks. Maybe I'll get assigned and I'll sell covered calls, but I do want to wait until after earnings just to make my decision. I know a lot of people have earnings plays for IV Crush. I don't really have time to manage or focus on that right now. So I'm just focusing on seeing what happens after earnings. I'll kind of close these out, but I'm pretty profitable. I'm very happy on this. For AMD, I'll probably roll it out to March 19th, another 30 days. When you want to sell strangles, I guess the rule of thumb is sell 45 to 60 days out and then manage maybe when they get 50%. But I wanted both of these to become 50% profitable, not just one side. So that's it for this video, when to take profits. I will show you, I will include this link. Watch the tastytrade guys. I watched their videos for like, I'll probably watch 100 videos over 8 years. They did all the back testing. They're the experts. I think Tom Sosnoff, he's been a trader for over 30 years. So these aren't my rules. These are back tested rules from the experts. And yeah, I just follow. So thanks for watching. Tune in to the next one.